I apologize for being in and out. This is a conversation we started a couple of months ago. I learned a great deal then, and I very much wanted to be here for all of the continuation of it. We've got flood insurance on the floor, though, right now in the Senate. A flood on the floor. So I had to be there for part of it. So I want to thank you, but I want to go back to something we've talked about before, and that's this is about the notion of the German model of manufacturing. The idea that there are high-wage, high-skill jobs, and that's where we're aiming. We're not aiming for the Chinese jobs. We're aiming for the German jobs that help us build a strong and robust middle class. But the question is, how do we get there? And we were once there, we're just not there now. And so, Dr. Berger, you talk about how it is that German firms, you talk about this in your research and in your book, German firms can bring innovation to market so much faster than we can here in the United States. And you talked about some of this in your testimony. And I made a note of the things you talk about. Relatively easy access to suppliers, local research institutions, university industry collaborations, a lot of things that right now small and mid-sized manufacturing just doesn't have access to. So my question is, and it's for all of you, but I want to start with Dr. Berger, what are the changes we could make in federal policy that would help support this kind of environment, the sort of chain that would help support mid-sized manufacturing?
I think that if we move when we give public funds, we should be giving public funds in whatever form, whether tax credits or subsidies, and not to individual companies, as we so often do today when communities give tax breaks to a company that will move into town. And that's a process that leads to one community basically competing with another. I think we should be trying to support institutions like the new National Additive Manufacturing Innovation Institute that's been set up in Youngstown, or like Semitech, or like some of these other institutions in which we're encouraging coalitions, teams of small and medium enterprises, large manufacturers, universities, and a variety of different community colleges and large universities to come together, and in which the withdrawal of any single partner would not kill the institution. Mm-hmm. What we've seen in Semitech, the consortium of semiconductor manufacturers, is that some partners have moved, some companies have moved out, others have moved in, but this institution that encourages road mapping, that allows companies to reduce their risk by combining some of their efforts, that allows companies to sponsor pre-competitive research together, that has kept semiconductor as a very vital part of the American economy. There are 250,000 jobs in that industry, an industry that in 1987 looked like it was about to disappear under the pressure of Japanese competition. So initially, the federal government actually supported that, but now it's basically supported by private companies and to some extent by the state of New York. It also needed, however, special antitrust protection. So that was another part of our effort there.
Good. Was there anyone who wanted to add to this? Mr. Hindery?
Senator, three quick comments. If you're a company that's dependent on a supply chain, your great fear is that the chain will be rolled up behind you. And our failure to enforce our trade laws is that palpable fear. When you talk to the SMEs about what is really holding them back, they say two things. One is a changed competitive environment out of their control, and something you're familiar with, especially on a personal level, which is access to credit. Mm-hmm. The big banks might get back to lending to this category. I'm not sure, which is why I spend so much time on small business initiative, development banks, export-import bank, things of that sort, which are institutions that we can direct more readily their behaviors. The one closing comment, when you had stepped out, I mentioned to Senator Merkley It was in 2010, following a dinner in Silicon Valley, the Machinists Union promised Apple that they would take every Chinese job and move it to the state of Oregon and promise a comparable product. And that
if only we could turn the clock back and make that happen.
And it was a comment made by Tom Buffenbarger to Steve Jobs, and it was rejected. And it was rejected in very large part because he knew that he could continue to go to the well in China for these subsidies, and if they were jobs heading back to the U.S. This sense that every solution can be found in high-tech manufacturing also troubles me greatly. Right. If I want to see manufacturing grow from 12 million jobs to 24 and higher, then I look to my colleague from Portland. Those jobs, these are hands-on jobs. These are the jobs that Senator Merkley's father and I had in growing up, and they're good jobs. Mm-hmm. We don't have to always be talking about this high end, because we're going to be leaving millions of American women and men behind otherwise.
Mm-hmm. Thank you. Ms. Skirvin, would you like to weigh in on this?
Yes, thank you for the question, Senator Warren. It's important to fund public education and to enhance and focus on technical training at the high school level, but even through programs like STEM to go to a lower level, to encourage kids at the youngest levels to be in math and sciences, and really look at their attributes and their capabilities, and encourage those that have those attributes in the technical arena or engineering or wherever to take those paths. To encourage public-private partnerships and to support workforce investment councils and community colleges. We're doing some of that locally to identify new hires and take that opportunity to give them more skills, but funding and support of those programs is very important. Good, good. And Dr. Scissors, did you want to add anything, or are we good here? Okay, good. I wanted to give you a chance if you wanted to. Can I just get going? Is that all right, Senator? Thank you. I want to talk about something else, and you alluded to it here, Mr. Hindery and Dr. Berger and Mr. Hindery, both in your prepared testimony. You talked about the question about access to funding, and I very much appreciate the point that you make about looking for alternative ways to fund. But I want to go back to the heart of this. And that is, right now, the Fed discount rates are available to the largest financial institutions in this country, and they are effectively at zero. So the question is, how do we get these larger financial institutions to start lending to smaller manufacturers, again, here in the United States? Mr. Hindery, can I start with you?
I think an enormous opportunity was missed, Senator, and there was no quid for the quo in the bailout. There are reserve requirements that could be lessened for lending to the SME community. There continues to be for certainly the next year or so. We're going to continue to discuss the vagaries of Dodd-Frank and other aspects of the reform. I think that you have to ask these banks to get back to lending. And whether you do it through reserve relaxations or just a demand that for the benefits that continue to flow from the federal government to their bottom lines, we need some balance here. Yeah. I do think that if you look, and you used the example, Senator, with Dr. Berger of Germany, the very specifics of their development bank, that would have been a chapter in my book. Mm-hmm. Their development bank is stunning. It's size insensitive. It goes deep into the chain, and it's not just the Mercedes-Benzes of the world and the Audis that can attract German development monies. It's down deep into the SME community. We need to do that. We also need to have a much more vital export-import bank that uses an SME track as part of the approval process.
You know, and I will pick up on that, because the point about the Export-Import Bank, even there, whether or not it's getting enough funding down to the smaller manufacturers, you want to comment on that?
I know the bank well, and it doesn't at all. It does whatever Boeing asks it to do, mm-hmm. but it doesn't go down deep into the chain. And if you want an Export-Import Bank loan, in my opinion, you have to respect the chain. And it's our money, you know. But the other one, Senator, and again, I apologize that you had walked out, or I regret that you had walked out, the National Infrastructure Bank, if we can keep it off the federal deficit, get it properly sized, as Senator Merkley often talks about, towards $1 trillion, and we put a made in America or a domestic content requirement on it, that's millions of instant jobs.
Yeah. Dr. Scissors?
I just, again, I'll give you the global perspective on this, and I realize there are a lot of American policy issues that I'm sort of touching on. I don't mean to. I mean to just talk about the global side, and let's just use Japan, because they are the longest period. The Japanese banking system is terrible now, and it never got any better, and it's impossible for it to get any better. I mean, Japanese banks have moved offshore and become very good banks, but there hasn't been any improvement in Japanese domestic capital allocation, and it's, you know, let's just think about this logically. Let's say we're making milk, and we set the price of milk to a penny. You know, what are you going to be doing in that situation? Who's going to be lending? Who's going to have the milk innovation? When you have no prices, you can't have a functioning market. So what I would urge, again, this is the international perspective, is when you're thinking about how to get credit to where it should go, to the most productive companies, you can't do that when you have no real prices. Can't do it. So proposals that are made, whatever they are, should be in the context of normal interest rates. And if for macroeconomic reasons, for whatever reasons, we can't get there for 3 or 4 years, okay. But if without that, it won't work. The Japanese have tons and tons of money. They have tons and tons of government options on sort of financing, and their banking system is awful because you can't have, I'm getting a little nerdy here, you can't have financial intermediation when you don't have a price. You can't have a banking system when you have an interest rate that's the base interest rate that's set to 0, a banking system that finds good projects. So all I want to do, without saying anything about U.S. policy options, they need to be explored in the context of going back to normal interest rates 10, 15, 20 years ago. That's where the federal government can make a difference. Otherwise, you're just swimming in this sea of liquidity and nothing really happens.
Yeah. So, you know, and you make a very fair point about this and about the effect of interest rates, but we can't use that as an excuse to obscure that there seem to have been structural changes in how lending occurs in the United States, and that the smaller financial institutions as a proportion of their capital are disproportionately engaged in small business lending, because small business lending has to be crafted in they tend to be one-offs. You have to understand the business that you're lending to. Large financial institutions, as a proportion of their capital in play, are moving, it appears that they are less enthusiastic about doing small business lending than they were a decade ago. And a decade ago, they were less enthusiastic than a decade before that. So as we see a shift in the banking industry, where we see so much more concentration in the larger financial institutions and so much squeeze on the smaller financial institutions, it has an echo effect in manufacturing in squeezing access to capital. So these things are interactive. It doesn't take away from your point, but your point is not the only change that's going on at this level, and that's the part I just wanted to explore some. You look like you wanted to say something more, Dr. Berger.
Yes, I would say that what's happened is that when we talk about local bank, the local banks now are national banks that have purchased the local banks. So there no longer is someone who knows local industry. There's no longer a person who can actually appreciate the circumstances of the small and medium manufacturer that they're talking to. And so the scene has changed entirely in a way that makes it really difficult for this national bank that may be locally present in Ohio to actually understand local industry well enough even to make reasonable decisions about who to lend to and how to lend to them. So I think we've had a structural change, and so that's the one we have to fix. I think the other point I would like to make is that the same financial market pressures that led to the fragmentation of American industry from the 1980s on are still eating up American manufacturing. One of the promising companies that we saw in Ohio was a company called Timken that makes tapered bearings, power transmissions, and steel. And in May, we learned that 2 of their shareholders, this is the California State Retirement Pension Fund, plus Relational Investors, another activist asset firm, have demanded that this firm actually split into two. This is exactly the same process that we've seen since the 1980s. Why? Because investors want pure play investments. So this company, which is sort of more or less 1/3 a specialty steel company, 2/3 a bearing transmission company, and which believes that there are synergies in production between these two activities, are actually being broken up by investors. We've seen this again and again across the manufacturing sector. And I think this has really had, I mean, I'm not talking about the particular circumstances of this company, but this is a process that continues and that has very negative effect.
Mr. Hindery, as long as the chair is going to indulge me here.
Timken Roller Bearings is in Hamilton County, Ohio. From 2006 to 2011, experienced more unemployment in Hamilton County than in any single county in the United States because of the transfer of production out of the United States to Chinese roller bearing companies. And the split is a desperation Hail Mary. This company was one of the great American companies that was destroyed by China trade. Just pure and simple. Under the Indigenous Innovation Act, you cannot buy Timken bearings in China.
So, Mr. Chairman, forgive me, I have been called away again. I do want to say that this point on finance, it's not only whether or not finance serves to help support the manufacturing we need, but whether or not finance has actually helped destroy much of the manufacturing we need. And so I appreciate your very thoughtful comments on that. Thank you, and thank you all. And I apologize that I'm not here for every word of this. This is terrific. Thank you, Mr. Chairman.